commissioned to understand and profile gold buyers. To present on the findings, I invite Professor Arvind Sahay, Chairperson, India Gold Policy Center, IIMA, who would be joining us online.
Good afternoon, everyone. First of all, my apologies for not being there in person. I had intended to be there, but some other engagements came up at certain levels of the government on another industry which required my presence elsewhere, and so I was not able to make it in person over here. I really very much wanted to come, partly because of Jaipur, and partly it would have been great to have been there and to have met all of my colleagues in the industry. So without further ado, since we have only 15 minutes, let me get started with the presentation. You have heard us talk about this earlier, that we were planning to do a nationwide survey of around 40,000 households to figure out the actual consumption behavior based on data. And we started this survey last year in October. Actually, the survey was supposed to start last year in March, and it was supposed to be over by around June or July, but we all know what happened beginning of March last year. So the survey eventually ended up starting in sometime in October of last year, and it continued on a reduced basis till around March, April of this year, and then again we had the second wave, and so it's an ongoing process. Nevertheless, we have data from around 22,000 odd households out of the 40,000 that we were targeting from a sample frame of 200,000 households around the country. And so we thought that it would be a good time to share the findings from the households that we do have data on so far. So this is essentially some information that we would like to share with the industry about the data that's come up from the survey. We commissioned this survey through the People's Research for Indian Consumer Economy, and it's an ongoing thing. So as I said, 27,000 households, my apologies, out of the 40,000 so far. And we have pretty much all the data that you can think about, state, sector, district, demographics, age, gender, household income, expenditure, investments, whether it was physical purchase or paper purchase, future intentions, you name it, and we have the information about this particular aspect of gold purchase between August 2020 and October 2021. The survey is ongoing. The main data which is missing is from the southern part of the country, partly because COVID has still not released its hold completely from certain parts, but we are hoping that in another month or so we should have all the data, which is around 40,000. So what are some highlights? As you can see, the demographic and the income distribution is, as you can see up here, most of the people are below an annual income of 4 lakhs, which is representative of the population. So far as the demographics is concerned, you can see that we have sampled Maharashtra and Uttar Pradesh the most, followed by Gujarat and Bihar. The southern states are still not represented because, as we speak, it's an ongoing process in the south of the country. Age-wise, the maximum numbers are between the age of 34 and around 46, 48. And in terms of education, as you can see, most people are below higher secondary, which is again as it would be, and quite a few are illiterate as well. So reasonably representative of the sample. Now please keep in mind that we sampled households according to the purchase consumption, that behavior that we already know happens. So for example, a certain number of households are in the south of the country, consumption, a certain percentage of consumption is in the south of the country, about 40%. So that will be the sampling from the south, around a certain percentage from the west, so the sampling is that much from the west. Similarly for urban and rural. We have also the occupation-wise distribution. You have self-employed, regulars, salaried, in agriculture, non-agriculture, wage labor, and so on. And again, as you can see, it's an interesting distribution. A whole bunch of people who are regular salaried or getting salary and wages, which we think is a reasonable approximation in terms of the sampling of the households in terms of the volume of gold going into certain kinds of households. So what are some highlights before we go into the details? We found that around 62% is, in terms of savings, is sitting in the bank or as cash at home. 15% is in gold. This is kind of consistent with the survey which was done around 5 years ago when the Tarun Ramadurai committee was doing a survey for RBI, and we were trying to figure out savings, what percentage of savings is there, as in what form, and gold came up as around 11-12%. So in that sense, 15% is actually higher than the Tarun Ramadurai report. If I were an optimist, I would think that people are saving more in gold than before. Of course, agri is relatively more represented than non-agri, and self-consumption is the most prominent purpose for buying gold, and which is followed by saving, by gifting, saving and investing, and saving behavior is manifested much more in the urban areas, again to be expected in a sense. The very significant part of the findings is that the pandemic did not affect the decision to purchase gold. So people still are either purchasing gold or are intending to purchase gold, except that the time and the quantity has shifted, and I think most people sitting in the room over here would have experienced that. There has been a rush recently over the last couple of months to purchase postponed gold, and the survey essentially kind of suggests that that is continuing to happen, which is good news, because in the last part of the presentation we also talk about gold and crypto. Data from the south is still to come in, as we talked about a little while ago. We are hoping that by the end of this month, early next month, it should be complete, and then we will be able to share the analysis with the industry. The rest of the presentation will talk about the purchase behavior, the sources of acquisition, monetization, and future intentions, along with QE and crypto and the impact on gold. So as we said earlier, 31% by cash at home, 31% bank, and 15% in gold and gold products. In terms of sectoral distribution, again, as you can see, that you have cash at home as a fairly large percentage, and gold and gold products are around 11%, as we had talked about a little while earlier. In terms of education levels, the professional and the literate and the postgraduate and the graduate, they are not insignificant proportion, as you can see. Having said that, the much larger one is people who are higher secondary and below, or even illiterate, as you can see. So therefore, in terms of volumes, that would be something to think about. For occupation, we have a distribution across everything. The interesting thing for me again is the very large proportion which are self-employed in various categories, whether it is urban or rural. Self-employed seems to be, at least from a household perspective, it's a fairly large proportion. What are the factors which drive purchase? According to this survey, at least, better returns, it's trustworthy, and simple and flexible procedure. The interesting thing is that there's not much difference between rural and urban. We all know that the price of gold went up to around 56,000 per 10 grams sometime in August last year, then it came down to 46,000 or so. And now, at least in dollar terms, it's coming back up. And the chances are, with rising inflation, we can expect an increase in gold prices. And so therefore, from a better return perspective, since that's one of the principal drivers, that's kind of good news for us. Interestingly, trustworthy, low risk, no risk. My assessment, of course, of this is that the purchase of gold is more about something that I can trust. And if we can add to the trust, then that would be really fantastic. Referring back to Som's presentation a little while ago, to the extent that we can increase trust in the industry, we provide a better investment option to the buyer of gold. What are the motivations? Returns and security and future savings, I think that's pretty obvious. But in terms of the education level and distribution, a majority of the households are reporting education levels of not more than higher secondary, right? Which is interesting. Now, we still have to do the analysis, which is going to tell us what is the proportion of gold, at least in terms of the survey, that is coming from households with no longer than higher secondary. And in terms of the income levels, there's no distinguishable impact of income levels on the motivating factors. So that is quite interesting because what the survey is suggesting is that regardless of the income levels, the motivations are relatively evenly distributed across the income levels. And so this is about the occupation. I'm going to skip this one and move to this purpose. As I had mentioned earlier in the highlights, self-consumption is the highest proportion across urban and rural. Gifting is the second, savings is the third, investment is the fourth. Again, one would need to map that with the actual volumes in each one of these categories, but at least at the household level, this is the information that is coming up from the survey. So, how is the purchase driven? Kind of something that is known to us. The survey more or less confirms this. For example, in times of uncertainties, gold is considered safe investment. The last 1.5 years have been uncertain. Of course, people have postponed the gold purchase to some extent, but now it's coming back up. And in the last 2-3 months, the purchase has taken up with a bang, and hopefully it will go up. One of the interesting things that you can see on this slide, of course, is that you see the perception. The trouble with gold is that you do not get a fair price when you sell, and the fall in the value of other asset classes and global uncertainties due to COVID-19 helped gold climb to a new record high. So that's the good news. The bad news is that people have some uncertainties about the resale value, and that has to do with the trust that we talked about a little while earlier. Most people have some of one or other of these reasons, so they're aware of the advantages and disadvantages. How do they pay for gold? So this to me is very interesting that 92% of the people are still paying for it in cash, despite everything that we have done so far in terms of moving towards increasing transparency. A whole bunch of people are paying through cash. Of course, above a certain limit, there are ways of monitoring the purchase of gold in different ways. Of the others, credit card, mobile wallets, UPI and loan, etc., the distribution is 2/3 and 1/3. 2/3 is debit cards and 1/3 is credit cards, mobile wallets and others. Again, please do keep in mind that this is at the household level and not necessarily in terms of individual transactions or the volume of gold. What are the sources of funds? Mostly your own savings. People are spending their own money to buy gold. There are loans from financial institutions, of course, which is a small proportion, about 8%. And then there's others like selling or exchange and mortgage of the gold products. So while mortgage of gold products has grown substantially in the last 2 or 3 years, which is reflected in the stock prices of some companies, but in the overall scheme of things, it's a fairly small percentage. So what are the sources of acquisition? Where did people buy it from? Primarily from jewelry shops so far, so that's the good news. In terms of the distribution of the jewelry shops, around 45% or so is from organized retail. So the share of organized retail seems to be increasing continuously, and in many ways that's a trend that is likely to sustain over time. And hopefully with that trend there is a greater amount of accountability as well in the industry. And branded retailers are getting quite a bit of traction. People like Tanishq and Kalyan and Malabar, TBZ, PC, etc., Joy Lucas and so on. Though others are still almost 50%. So organized retail, as you can see, is 45% plus almost 50%. It is interesting that households are agreeing with the fact that advertisements had a major role in motivating gold purchase. In that sense, you could argue that organized retail has something of an advantage because clearly the proportion of the mind space and the inventory of advertising space that's available in different media that is occupied by organized retail is much, much higher as compared to others. How do people monetize the gold? So in terms of the planning of purchase, it was not really affected, even though during the pandemic and perhaps even today, you can see some huge variations as to when people are buying. But the general sense that one is getting from the 27,000 odd households which are part of the analysis so far is that the process will continue. That's the sense that one is getting. During April 2020, before the second wave came, we had asked whether people were willing to partake in gold expenditure. And clearly at that point in time, the answer was no, even though overall they will still want to buy gold. And we also asked the question as to what is the purchase of gold which has resulted from COVID as an event. So in addition to acting as a safeguard against economic uncertainties, households also purchased gold because of social insecurities. And this kind of substantiates the point which many of us are kind of already aware about. And after 2020, the ones who did purchase, it was about taking advantage of higher gold prices, and probably the forthcoming uncertainties. Given that inflation is on the rise and in the last few days, the price of gold has broken a technical barrier, so one may expect that the price of gold may go up further, which could perhaps lead to more purchase by people in anticipation of that rise in price. So when do people time their sales? So some households found themselves selling their gold jewelry, obviously to meet the financial needs during 2020. As you can see, a substantial difference compared to the usual times. Normally it's only around 15%. In this case, in the year 2020, it's close to a quarter. And the reasons for making the sale, the usual stuff, meeting financial needs, and for the improving my status and in medical emergencies, which are the top 3 or 4 reasons for doing so. Are people willing to take a loan against gold jewelry? Most households have not actually thought about or pledged, which is kind of interesting. So a lot of scope for moving in this direction of monetization in different ways. So some have pledged clearly and more in the urban areas as compared to rural, but it's a much smaller proportion compared to who have neither thought of pledging or pledged, or who have thought about it but have not pledged. And from a gold monetization perspective, this is something to kind of examine to see how people who have neither thought or pledged, or who have thought and not pledged, can be persuaded. Of course, there's a need which drives that, and that's a different issue altogether. So what are some reasons for not pledging? Social stigma is an interesting one. And there are some companies which have started their business built around the idea that there is a social stigma attached to pledging of gold. In fact, I remember that some time ago, we wrote a case on a company that was built around the idea that people find it a little uncomfortable to go out and be seen to have pledged their gold, that they'd much rather prefer that somebody comes to their house and takes the gold and gives them the money right there without them having to go anywhere. And why do people not sell the gold? It's about not necessarily wanting to be seen to be selling the gold. There are issues of financial security attached. There are issues of future savings and so on. But I'm not going to dwell on this. What are the future intentions to buy gold is something that all of us would be interested in. Clearly, at the time that the survey was done, it was not planned yet, but as most of us know, many people have come back. Quite a few were willing to buy, but many people have come back. What is the purpose of future consumption? So in that sense, the reason for buying has not changed. Right. We had said earlier that the primary driver was self-consumption, and then it was gifting and savings and investment. So self-consumption remained the largest one. Saving has moved up. Here it was third in the list. Gifting was the second. Savings and investment were coming later. But savings has moved up as a reason as a purpose for future consumption of gold. Major occasions for purchasing gold in the future, consistent with what we have seen earlier, weddings and festivals are the 2 largest ones. Interestingly, around 20% of the purchases are not about any bespoke occasion, no specific occasion. This is kind of an opportunity, because that means we can or we should be thinking about as an industry to see how we can increase the proportion of the sales over here. 20% is not an insignificant proportion, but surely it can be more. The final point that I would like to leave you guys with, so what happens to gold in an age of quantitative easing, when there's so much money floating around, when cryptocurrency as an alternative asset class is also making its presence felt, and we have a lot of young Indians, especially millennials, who are beginning to think of crypto as an investment. So if you look at various asset classes across time and compare their movement in terms of various indices and the value between January 2003 and June of 2021. So as you can see, the MSI World Index and the total assets of central banks, they are the ones which have gone up really quite a bit. The value of gold ETFs have not really gone up as much over a period of time corresponding to the total assets under management of gold-backed ETFs. So these are only the financial assets. If you are looking at gold and physically, then we would clearly add to this. We tried to construct also a correlation matrix between the cryptocurrencies, the different indices of financial markets and of gold. And you can see that the assets under management in gold ETF and market capitalization of cryptocurrencies is highly positively correlated, 0.63. So in technical terms, it would mean that we are in a good place. The interpretation would be, and of course this is very preliminary, but it would mean that we are in a good place because if the correlation is positive between gold and crypto, that means if crypto goes up, so will gold. This is very preliminary at the moment, so I'm not kind of committing to this in any way, but just thought to share the beginning of this research. So by the way, this research is different from the survey. We are also doing a bit of research on, which is looking at gold as one of the assets that I have in my basket for asset allocation along with crypto and other assets. So let me just conclude very quickly by talking about what are some potential policy implications, if any, of the survey and what we are doing in terms of the research on gold and crypto. I think the 2 or 3 things which are coming out very clearly, at least even from the 27,000 households from which we have the data so far, and hopefully the trends will remain reasonably similar across the entire 40,000 as and when the entire 40,000 are available. That gold continues to be perceived as a very significant avenue for savings and gifting and investments. But the primary reason is consumption from weddings and for purposes of festivals. And that seems to be reasonably stable either in terms of purchases or planned purchases. The pandemic did cause a hiatus, but it seems to be coming back. So that's one clear implication. The second one, if you will recall, we saw that the proportion of sales coming through the organized retail is now close to 50%. So that's, I believe, is good news for the industry. The greater the proportion that becomes organized, formalized, the better it is for the industry. The government is also quite clear now. I think it should not escape anybody's attention that we are moving towards a greater degree of formalization of the economy as a whole, and definitely for gold as an industry. The more we are able to kind of align ourselves with that movement, the better off we will be. And third thing that I would probably want to leave you with is that for the moment, at least the preliminary sense that one gets is that that purchase of gold and crypto are looking as if they are positively correlated, but this is very preliminary. Whether it will be a complement, a substitute, or both will coexist in a larger basket because there is more money floating around is something that needs to be examined for the future. So let me stop there for the moment. I hope I have not exceeded my time by too much. Thank you very much for the opportunity. Look forward to any questions or observations that you might have.
Hi Arvind, this is very insightful. Obviously we'll look to see that being public. I guess you'll have to wait till your South data is available. I just want to ask one question. When you you put a chart about cash, 92%, and we have also seen it in one of our research, 92% of those who buy gold buy it in cash. It's a very strange phenomenon because you can't have 92% of the country not using digital means. I mean, that's not what we see, correct? I mean, if you take the country as a whole, at least 50% of the country now has moved into digital. I'm just throwing a figure, I don't know the figure. But 92% of those who buy gold are buying it in cash. So my question here is it possible to split it, that 92% into people who use digital for other transactions, or who are familiar with digital but still continue to pay cash for gold, and the rest?
So, if you look at the survey and the way it is framed, survey data is right now, the analysis that I have presented to you is at the level of the households, right? One has not really gone into depth in terms of the volumes per household. So that's one part of the response that I would have for you. The second part of the response has to do with the fact that, yes, digital payments have increased substantially. But that's across many different sectors. What is the volume of gold that is actually being bought using digital payments? That is something that our survey is saying is not that high. From other evidence and other areas, I am inclined to buy the idea that gold is still largely cash driven, at least because most of the gold that is purchased is jewelry. And jewelry tends to be driven by cash, by and large. The gold that is bought digitally could be ETFs, or it could be those forms of digital gold which are available. And I think, I do not recollect the numbers off the top of my head, but the total volume of gold that is going through that channel is actually much lower. So in that sense, the 92% number that is coming out is probably not inconsistent. Why that should be so is a question that I do not have an answer to just now. One would need to look deeper at the data as to why that is happening, if indeed the data actually present us that, because while we have questions which tell us what is it that they have used, how much gold they have purchased, what is the intention to purchase in the future, and what form they have purchased, and whether they have purchased through cash or check or credit card or debit card or other means, the intentionality driving that choice of the mode of payment is perhaps not part of this survey just now.
Okay. No, because I led with this because in the policy implications, maybe it might be worthwhile to say that 92% of those wanting to buy gold prefer to use cash, but the same people are digitally savvy, at least a large chunk. They are using digital for other purposes. So the 92% status is a indication of the reluctance of both sides to move into a more transparent method of payment, perhaps.
That is a fairly interesting implication and quite plausible, one could say.
I have one question. This is Vikas Nagpal. Since you said in your presentation that between crypto and digital and the gold, there is a positive correlation of around, I think, 0.62, 0.65, some number you told. Though you said there is no enough data and all. But what is your view? Basically, in fact, we were discussing internally also, that see, crypto is being very volatile in last, say, couple of years we have seen and all. So don't you think that since there is a lot of investment which is happening in crypto, and because of COVID and the price went up, that's why the gold investments were high. But don't you think in future, because people are putting more and more money in crypto and it's highly appreciating asset class as of now, so there could be a scenario where people may move out from gold and start putting more money in crypto?
First of all, yeah, 0.63 was the number.
Sorry. Let me put in, crypto is one asset class. There is another asset class like stable coins and so on and so forth. Because these types of currencies now there are, say, Facebook and maybe JP Morgans of the world, they are coming up with their own sort of currency, paper currency or digital currency, I would say.
So thank you for the question, Vikas. So yes, absolutely, 0.63 was the number. And I'm hesitant to have any point of view on this because I would rather be driven by the data which is present. But when we talk about crypto, we need to be clear on the nature of the crypto that we are talking about. Now, something like Bitcoin or Ethereum and Ripple, they are what we know of as public permissionless blockchain, where it is very difficult to trace the provenance of a particular individual or the transaction. You can check whether a transaction has happened and you can value the transaction. So from the regulatory perspective, you can expect more oversight of crypto, especially the public permissionless ones that we are talking about. The stable coins that you're talking about, the government-backed CBDCs, or what are known as central bank-backed digital currencies, will also be crypto, but these will be more under the purview of a central bank, and so more directly monitorable, if you will, from on the part of the sovereign governments and the central banks, which is the way that things will evolve. Will crypto continue to exist? Yes, it will. The public permissionless crypto like Bitcoin and Ethereum, will it continue to exist? Yes, it will. Even though there is a limit to it, because Bitcoin, for example, the total number of Bitcoins which can be mined are 21 million, out of which around 19 million have already been mined. That's the way it's been set up. And so therefore there is a limit to how much it can go. So the price of crypto by definition will go up. If the total amount is limited and more people want it, then the price will go up. It will be volatile for many different reasons, because of regulatory pressure, because human psychology can go up and down over time and so on, but it will exist as an asset class. If you look at large investment banks like the Goldman Sachs, JP Morgans and so on, now they have desks which allow crypto as an asset class for some of their high net worth individual clients. And one anticipates that that will continue to kind of spread into other large investment banks, because high net worth individuals would like to have a basket of assets, of which crypto is seen to be one. I am aware of some people in Singapore, for example, who allocate around 3%, 4% of their net assets to crypto as a class, but they're very clear that it won't be more than 3 or 4% because it's so volatile. From gold's perspective, to me the key is that how do the present users of gold in their various forms look at crypto as an asset? If I am a person in India who is buying gold as jewelry, is crypto really a substitute of any kind? And probably the answer to that is no. If I am a person in India who is buying gold bar and bullion as an asset class for investment, not as jewelry, for investment, is crypto a complement or a substitute? At this moment, the answer to that is not really clear, either at the Indian level or at the global level. Of course, India and China are the largest consumers of gold. So we are actually conducting some research. We are trying to get together some data to help us get a deeper insight into what is the relationship between gold and crypto as of date. My sense is that another 3 months, 4 months, by January or February, we should have some more deeper and more insightful results. Right now, we are still in the process of getting the data together and trying to assess what is the relationship between the price of gold and price of crypto, the use of gold and use of crypto.
Thank you so much, Professor Arvind Sahay, for sharing such insights. Thank you so much.
Thank you.